Welcome to the deep dive. Today, we're going to be looking at some really interesting stuff about PDS Limited.
Okay.
And they are, for folks who might not know, a global sourcing and manufacturing platform that basically connects brands and retailers with the manufacturers who are actually making all the clothes and everything.
Yeah,
And you've been looking into their latest financial results.
I have.
We've got two documents here,
Yeah, great documents.
two really interesting sources. We've got their official statement from their second quarter results, fiscal year 2024-25,
Yes.
and this really interesting investor presentation.
Yeah, and having both of those is really insightful.
Yeah.
You know, that official statement gives us the hard numbers, the audited financials,
Right.
while the investor presentation kind of adds a layer of storytelling. What are the key achievements?
Yeah.
And what are the areas that they're focused on for growth?
Yeah, exactly. It's like
Yeah.
we get the numbers and the strategy behind them. So why don't we start off, for folks who might not be too familiar with PDS Limited,
Sure.
could you give us a quick rundown of what they do?
Sure. Think of them as the behind-the-scenes players in the fashion world.
Okay.
They operate in 22 different countries,
Wow.
connecting retailers and brands with the manufacturers who actually make the clothes.
Okay.
They recently had their board meeting and released their Q2 results,
Okay.
which is what we're going to be unpacking today.
Awesome. So let's jump right into those results. Anything particularly exciting that kind of jumped out at you?
Well, one of the things that immediately grabs your attention is the gross merchandise value, or GMV.
Oh, okay.
And this is essentially the total value of all the goods sold through their platform.
Gotcha.
And they hit a record high this quarter, a whopping 5,437 crore rupees,
Okay.
which is a 39% jump compared to the same time last year.
Wow. That's a huge leap.
Huge.
What about their revenue? Did that see a similar increase?
Absolutely. Their revenue also saw a significant jump, growing by 34% year over year.
Okay.
And it's not just about top-line growth. Their profitability metrics are also looking really healthy.
And this is where things get really interesting for me, because I know sustainable practices often take a hit when companies are focused on growing fast.
That's a great point. And that's something we should definitely dig into later on.
Yeah.
But before we get there, let's look at the numbers a bit more.
Okay.
Their EBITDA, which basically gives us a sense of their operating profitability, shot up by an incredible 103% compared to last quarter.
Wow.
And their profit after tax, the actual profit they made after all expenses, tripled compared to the first quarter of this fiscal year.
Okay, so they're not just growing, they're growing profitably.
Yes.
But growth like this doesn't just happen magically.
Right.
What's fueling the success?
Well, the investor presentation highlights several key factors. First, they're seeing strong growth across almost all of their segments. Their North American market in particular is booming.
Okay.
62% year-over-year growth.
That's amazing. Why do you think North America's performing so well for them?
Well, one possible factor is their strong relationships with major retailers in that market.
Uh-huh.
You know, they've been strategically building these partnerships for years.
Right.
And it seems to be paying off. Another factor could be their focus on near sourcing, which basically means they're setting up manufacturing facilities closer to their customers.
Right.
And this helps them reduce shipping times and costs,
Yeah.
which is especially important in today's kind of fast-paced retail environment.
Right. Makes sense.
Yeah.
Okay, so North America's doing great. What about their other markets?
Yeah.
Are they seeing similar success?
They are. If you look at their top 10 source and verticals,
Okay.
the categories that make up the bulk of their business,
Right.
those are doing exceptionally well too.
Mm-hmm.
Those top 10 categories represent a significant portion of their revenue, about 76%, and they're growing at an average rate of 33%.
So it seems like they're firing on all cylinders, really performing well in their core business.
Yeah.
But they're not just resting on their laurels, right?
Right.
The investor presentation also talks about their expansion into new areas like fast fashion and online channels.
Yes, they're definitely branching out and exploring new avenues for growth. And they recently partnered with Fashion Nova,
Okay.
which is a major player in the online fast fashion space.
That's a big win. I'm really curious about this move into fast fashion, especially considering Their emphasis on sustainability.
Yeah.
How do you see these two seemingly conflicting goals playing out?
It's definitely something to keep an eye on.
Yeah.
Fast fashion has faced a lot of criticism for its environmental impact,
Hmm.
and it'll be interesting to see how PDS Limited addresses these concerns.
Yeah.
So they've set up dedicated entities called PDS Online Enterprise in Hong Kong and the UK,
Okay.
specifically to focus on this fast fashion and online market segment.
So they're really going all in on this new direction. Is there anything in the materials that suggests how they're going to approach like the sustainability aspect of fast fashion?
Well, they've highlighted their commitment to ethical sourcing and sustainable manufacturing practices,
Mm-hmm.
but the specifics of how they'll apply those to fast fashion aren't entirely clear yet.
Okay.
Perhaps we'll see more details emerge as they roll out this new venture.
That's a good point. It's something we can definitely keep an eye on. They're also expanding into brand management, right?
Yes,
I remember seeing something about that in the materials.
you're right.
Mm.
They're taking a really interesting approach to brand management focused on strategic acquisitions.
Okay.
They're acquiring small and medium-sized brands, primarily in the UK and US markets,
Okay.
but doing so with a very specific model in mind.
Okay. Tell me more about this. What kind of brands are they targeting?
They seem to be attracted to niche brands that already have a loyal customer base
Hmm.
and the potential for growth. Importantly, they're committed to a pre-sold model,
Okay.
meaning they secure orders from retailers before actually manufacturing the products.
That sounds like a smart way to minimize risk.
Yes,
It's like they're testing the waters before diving in head first.
exactly.
Speaking of acquisitions, let's talk about Ted Baker.
Sure.
I know they acquired that brand a while back, and I'm curious about how that integration's progressing.
It's been a bit of a roller coaster ride, to be honest.
Oh, wow.
They've encountered some bumps in the road,
Okay.
particularly with the administration of Ted Baker's retail partners in Europe and the US.
Oh, wow. That sounds challenging.
It definitely was,
Yeah.
but PDS Limited is showing resilience.
Okay.
They've landed a new partnership with United Legwear and Apparel, or ULAC, to handle operations in the US, Canada, and online in the UK and Europe.
Okay, so they found a new partner to help them navigate those markets. That's a good sign. What else are they doing to kind of turn things around with Ted Baker?
Well, they've successfully migrated Ted Baker's operations to SAP,
Okay.
which is a major undertaking.
Okay.
They've also secured trade lines and a factoring facility with HSBC and DBS.
Okay.
And they even moved the Ted Baker team to the Fraser's office.
Wait, the Fraser's office?
Yeah.
Is there a connection there?
That's the intriguing part.
Okay.
That move suggests that there might be some opportunities for cross-leverage within the Fraser brand portfolio,
Gotcha.
which could be a huge boost for Ted Baker's growth.
Okay, so we've covered their core business, their expansion into fast fashion, their brand acquisitions. There's a lot going on with PDS Limited.
Yes.
Is there anything else we should know about their growth strategy before we move on?
Yes, actually. There's one more area where they're making significant strides.
Okay.
Software as a service, or SaaS.
Oh, right. I almost forgot about that.
Mm-hmm.
Their SaaS business has been, quietly growing in the background, right?
Quietly, but very effectively.
Yeah.
They've seen a remarkable 100% year-over-year increase in their SaaS GMV.
That's incredible. What's fueling that kind of growth? Are they working with any major players in the retail space?
The expansion of their SaaS offering to ASDA, a major British supermarket chain,
Okay.
has been a key driver. They're providing ASDA with a full suite of software solutions to manage their supply chain, improve efficiency,
Mhm.
and boost their online presence.
So they're leveraging their expertise to provide valuable solutions to like big retailers. That's a smart move. But I also remember reading something about them ending a contract with Hanesbrands. What happened there?
Right. There's a bit of a twist in the story there.
Okay.
You're right, they are in talks to discontinue their SaaS contract with Hanesbrands,
Mm-hmm.
which might seem counterintuitive after such impressive growth.
Yeah, I'm all ears. Why walk away from a seemingly successful partnership?
Well, it's a combination of factors. Firstly, Hanesbrands recently sold their Champion brand to Authentic Brands Group, or ABG,
Okay.
and that led to lower than expected volumes
Okay.
for the S offering.
So the business case changed, essentially.
Exactly.
Okay.
The reduced volume from Hanesbrands just didn't justify maintaining the dedicated team that PDS had put together
Right.
for that contract.
Makes sense.
So-
But this doesn't mean they're giving up on Hass altogether, right? They're still
Yeah.
working with ASDA.
Absolutely.
Okay.
The Hanesbrands experience, while ending sooner than expected, wasn't a failure. They established a successful proof of concept during that partnership.
Okay.
Now they're taking those lessons learned and refine their SaaS model with ASDA,
Okay.
which is a much larger and more promising opportunity.
So potentially end in one contract to focus on a more lucrative partnership.
Exactly.
That sounds like a strategic decision, especially if they're looking to make a big splash in the SaaS space.
Hmm.
But let's not forget about sustainability, which we touched on earlier.
Sure.
Where does PDS Limited stand on that front?
They've actually taken some really interesting steps to integrate sustainability into their operations.
Okay.
For instance, they've partnered with HSBC and Emirates Bank Dubai for a sustainability-linked trade finance initiative.
Hold on. What does that mean? That sounds complicated.
It's actually quite innovative.
Yeah.
This initiative allows PDS Limited to get discounts on trade finance based on how well they perform against certain key performance indicators,
Okay.
or KPIs related to sustainability.
Interesting. So it's like a reward system for being eco-friendly.
Yes.
What kind of KPIs are we talking about?
So they're focused on crucial areas like reducing greenhouse gas emissions, minimizing freshwater consumption in their manufacturing processes, and ensuring they source materials ethically.
Okay.
Essentially, it's a financial incentive for them to improve their overall environmental and social performance.
Okay, I'm starting to see how they're trying to weave sustainability into their business practices.
Yes.
What other initiatives are they pursuing in this area?
They recently participated in Bharat Tex 2024, which is India's largest global textile show, and they're planning to be a part of the 2025 event as well.
Okay.
It's a great platform for them to showcase their commitment to sustainability to a wider audience. They also launched some interesting products like the Design Arc Bedding Collection, which features really innovative designs and uses sustainable materials.
It sounds like they're not just talking the talk, but actually walking the walk
Exactly.
when it comes to sustainability.
They are. They're not perfect, and there are always challenges.
Right.
But it seems like they're making a genuine effort to operate in a more responsible and sustainable way.
Okay, we've covered a lot of ground here.
We have.
But let's get back to the financials.
Sure.
Can you give us a quick rundown of their key numbers for Q2 and the first half of the 2025 fiscal year?
Sure. In Q2, they achieved a revenue of 3,306 crore rupees,
Okay.
which translates to about $395 million.
Gotcha.
For the first half of the fiscal year, their revenue reached 5,927 crore rupees, or $709 million. Their profit before tax for Q2 was 101 crore rupees, or $12 million, with a half-year profit before tax of 137 crore rupees, about $16 million.
Okay.
After-tax profit for Q2 stood at 93 crore rupees, $11 million.
Gotcha.
And their half-year profit after tax reached 124 crore rupees, or $15 million.
Okay, those are some impressive figures.
Yeah.
It seems like their profitability is definitely heading in the right direction.
Yes. And they're sharing this success with their shareholders.
Okay.
They proposed an interim dividend of 1.65 rupees per share,
Okay.
which represents a payout ratio of 83%.
That's great news for investors, but I remember they recently did a qualified institutional placement, or QIP, right?
Right.
How does that factor into their dividend decision?
Right. They raised a significant amount of capital through that QIP, which actually led to an increase in their paid-up equity share capital.
Okay.
And this definitely plays a role in their ability to offer such a generous dividend.
So it's all connected.
Yeah.
The QIP, the dividend, their growth plans, it's all part of a larger strategy.
Exactly. They're using all the tools at their disposal to drive growth, reward their investors, and solidify their position in the market.
Okay, so we've looked at their financials, their growth initiatives, their sustainability efforts. There's a lot to unpack here.
There is.
What's the big takeaway for someone looking at PDS Limited? What stands out to you?
What's really striking is the balance they seem to be achieving.
Okay.
They're pursuing aggressive growth, both organically and through acquisitions, but they're also trying to be mindful of sustainability and build a responsible business.
Right.
It's not just about the numbers.
Yeah.
It's about building something that will last.
Yes. I totally agree. They're not just chasing profits. They seem to be genuinely trying to create a positive impact. It'll be interesting to see how they navigate the challenges ahead, especially as they delve deeper into the world of fast fashion.
Absolutely.
Yeah.
Speaking of fast fashion, that's one area where I have a lot of questions. It's a market that's often at odds with sustainability.
Yes. I'm curious to see how they plan to reconcile their fast fashion ambitions with their sustainability goals. They talk a lot about ethical sourcing and responsible manufacturing, but how does that translate to the fast fashion model, which is often criticized for its environmental footprint and questionable labor practices?
Exactly. That's the big question.
Yeah.
And it's something we need to explore further.
Mm.
Their partnership with Fashion Nova will be a key test of their ability to create a more sustainable approach to fast fashion.
Absolutely. And we can't forget about their brand acquisitions. They're building a diverse portfolio of brands, but integrating those brands successfully will be crucial for their long-term success.
Hmm.
The Ted Baker acquisition, for example, has already presented some significant challenges.
Right. And let's not forget about their foray into sows. They've had some wins, but also some setbacks.
Hmm.
It'll be interesting to see how they leverage technology to create new revenue streams and enhance their value proposition in an increasingly digital world.
So many move-in parts, so many things to consider. But before we get too deep into those details, I want to take a step back and look at the big picture. PDS Limited has gone through some significant transformations over the past few years.
Hmm.
They started as a sourcing company, but they've evolved into something much more complex and multifaceted.
You're absolutely right. They've expanded into new markets, new product categories, new business models.
Yeah,
And it's not just about expansion for the sake of expansion.
right.
They seem to have a clear vision for the future, and they're making strategic moves to achieve their goals.
Exactly. So before we dive deeper into the specifics of their strategy, I want to ask you and our listener this. What are your initial thoughts on PDS Limited?
Mhm.
Are you impressed by their growth and ambition? Or are you skeptical about their ability to balance all these different initiatives, especially given the challenges they're facing in areas like fast fashion and brand integration?
I'm definitely impressed by their ambition.
Okay.
They're not afraid to take risks and push boundaries.
Hmm.
But I'm also curious to see how they'll navigate the complexities of their chosen path.
Right.
It's a delicate balancing act,
Yeah.
and it'll be fascinating to see how it all plays out.
Yeah, absolutely.
It's a bit like juggling, isn't it?
Yeah.
Keeping all those balls in the air
It really is.
while trying to move forward at the same time.
Yeah. Okay. So let's unpack some of these specific areas that we've touched on.
Sure.
You mentioned earlier that PDS Limited's North American market is booming.
Yes.
They're seeing incredible growth there.
Mm-hmm.
What exactly is driving that success?
Well, if we dig into the investor presentation, it's clear that strong customer relationships are a key factor.
Okay.
They've cultivated these relationships with major retailers over many years,
Mm-hmm.
and it's providing them with a stable base for expansion.
So those established relationships are giving them a competitive edge.
Absolutely. In a market as competitive as North America,
Right.
having those trusted partnerships can make all the difference.
Yeah.
Another contributing factor is their focus on near sourcing,
Right.
which I mentioned earlier.
Mhm.
They're strategically establishing manufacturing facilities
Yeah.
closer to their North American customers.
Right. That makes a lot of sense, especially in today's world where speed and efficiency are paramount.
Yeah,
It also helps them mitigate those supply chain risks that we've been hearing so much about lately.
exactly.
Yeah.
By bringing production closer to their customers, they're reducing shipping times and costs,
Yeah.
which is a win-win for everyone involved.
Right.
It also allows them to respond more quickly to changing trends,
Right.
which is crucial in the fast-paced world of fashion.
And speaking of fast fashion, that's one area where I'm particularly curious to see how PDS Limited will strike a balance between their growth ambitions and their commitment to sustainability.
I'm with you on that. Their
Yeah.
partnership with Fashion Nova, while potentially lucrative,
Mm-hmm.
raises some important questions.
Right.
Fast fashion has a reputation for being, well, not very sustainable.
Exactly. The investor presentation highlights their move into this market with a lot of enthusiasm,
Yeah.
but it doesn't really address the elephant in the room, which is the environmental and social impact of fast fashion.
Right.
How do they plan to reconcile those two seemingly conflicting goals?
It's the big question, isn't it?
Yeah.
And to be fair, the materials don't provide all the answers.
Yeah.
They do mention their commitment to ethical sourcing and responsible manufacturing,
Mm-hmm.
but it's not entirely clear how those principles will be applied to the fast fashion model,
Right.
which is known for its rapid production cycles and high volumes.
It's definitely a watch and see situation.
Yes.
But they're not just relying on partnerships to grow in this space, right?
Mhm.
They've also set up those dedicated entities, PDS Online Enterprise, in Hong Kong and the UK.
You're right. That move suggests they're serious about building a strong presence in the online fast fashion market.
Okay.
By creating these specialized entities, they're essentially building separate teams and infrastructures specifically focused on this segment.
It'll be interesting to see if they take a different approach with these online ventures, maybe incorporating more sustainable practices from the get-go.
Perhaps. It's definitely something we should track as they release more information about these entities and their operations.
Okay, so let's shift gears a bit and talk about their brand management strategy.
Okay.
They've been acquiring a lot of smaller brands, particularly in the UK and US. What's their approach here? Are they just buying up brands randomly?
Not at all.
Okay.
They seem to be very strategic in their acquisitions,
Okay.
focusing on niche brands that align with their overall vision and have the potential for growth.
Right.
Think of it like they're building a curated portfolio of brands.
Right. So they're not just looking for any brand. They're looking for brands that fit into a larger strategy.
Yes.
The investor presentation mentioned they're focused on a pre-sold model for these acquisitions.
Okay.
Can you remind me what that means?
Sure. The pre-sold model means they secure orders from retailers before they commit to manufacturing the products. So essentially, they're minimizing their inventory risk.
Ah, that makes sense. It's a smart way to test the market and make sure there's actual demand for the products before they invest heavily in production.
Exactly. It was a cautious approach.
Yeah.
Especially considering the uncertainties in the global economy right now.
Yeah.
They're essentially ensuring they have a buyer lined up before they start making the close.
Okay, I see the logic there. Now, speaking of acquisitions, I have to ask about Ted Baker.
Sure.
I know they acquired that brand with high hopes, but it sounds like the integration hasn't been entirely smooth sailing.
Yeah, they've definitely faced some challenges with Ted Baker.
Okay.
The administration of some of Ted Baker's retail partners in Europe and the U.S. was a curveball they probably didn't anticipate.
Oh, that must have been a major setback. What are they doing to address those issues and kind of turn things around?
Well, one positive sign is their new partnership with United Legwear and Apparel, or ULAC,
Okay.
for the U.S., Canada, and online operations in the U.K. and Europe. It seems like they've found a partner to help them navigate those tricky markets.
So a strategic partnership to help them get back on track?
Yes.
Good move. What else are they doing to right the ship with Ted Baker?
They've been busy.
Yeah.
They successfully migrated Ted Baker's operations to SAP, secured trade lines, and a factoring facility with HSBC and DBS,
Okay.
and even moved the Ted Baker team to the Fraser's office.
Hold on. The Fraser's office. Didn't we talk about that earlier?
We did.
Is there a connection there?
That's the interesting part.
Okay.
This move suggests they might be exploring some synergies with the Fraser's brand portfolio,
Okay.
which could be beneficial for Ted Baker's long-term growth.
Right.
Perhaps they're looking at cross-selling opportunities or ways to leverage Fraser's existing infrastructure to streamline Ted Baker's operations.
Okay, so it's not just about fixing the immediate problems.
Yeah.
They're thinking strategically about how to integrate Ted Baker into their broader brand portfolio and maximize its potential.
Yes.
That's encouraging.
It is. It shows they're not giving up on Ted Baker despite the initial challenges. They're committed to making it work, and they're willing to try different approaches to achieve success.
So we've talked about their core sourcing business, their foray into fast fashion, and their brand acquisitions. Let's not forget about their software as a service, SA business.
Right.
That's an area where they've seen some really impressive growth.
Right. It's almost like a hidden gem within their portfolio.
Yeah.
Your SaaS business has quietly been racking up some serious wins.
They've seen 100% year-over-year increase in their SaaS GMV.
Yes.
Which is pretty remarkable.
It is.
What's driving that growth? Are they working with any big names in the retail industry?
Their partnership with ASTA, the British supermarket giant,
Okay.
is a major factor in their SaaS success.
Okay.
They're providing ASTA with a comprehensive suite of software solutions,
Okay.
covering everything from supply chain management to online operations.
It sounds like they're really positioning themselves as a one-stop shop for retailers looking to optimize their operations and enhance their digital presence.
Exactly. They're leveraging their deep understanding of the retail industry to create tailored software solutions that address the specific needs of large retailers like ASDA.
But they've also hit a few snags in their SaaS journey, haven't they?
Yes.
Earlier, we mentioned their decision to potentially discontinue the contract with Hanes Brands. That was unexpected.
Yes, it was.
Yeah.
On the surface, it might seem strange to walk away from a seemingly successful partnership.
Right.
However, when you dig into the details,
Yeah.
It makes sense from a business perspective.
Okay.
Hanesbrands' decision to sell their Champion brand
Right.
had a ripple effect on the volume of business they were doing with PDS,
Okay.
making the partnership less financially viable.
So it was a pragmatic decision, ultimately.
Yes, exactly.
Yeah.
They recognized that the economics of the partnership had changed, and they made a strategic decision to reallocate their resources to more promising opportunities.
And that brings us back to ASDA,
Yes.
which is a much larger and more established player in the retail space.
Yes.
It seems like they're doubling down on that partnership.
Absolutely. The Hanesbrands experience, while ending sooner than expected,
Right.
wasn't a wasted effort.
Okay.
They learned valuable lessons during that partnership, and they're now applying those lessons to their work with ASDA.
So they're constantly refining their SACE model,
Yeah.
learning from their experiences, and
Right.
evolving their approach based on market dynamics.
Mm-hmm.
That's encouraging.
It is. It shows they're not afraid to adapt and make tough decisions when necessary.
Right.
They're not just blindly chasing growth.
Right.
They're being strategic and thoughtful about their investments.
Okay, so we've covered their core business, their expansion into fast fashion, their brand acquisitions, and their SaaS ventures. Let's circle back to one of the most important topics we touched on earlier. Sustainability.
Yeah, sure.
It's clearly a key part of their messaging and their overall strategy.
Absolutely. Sustainability is no longer just a buzzword. It's a core business imperative,
Right.
especially for companies operating in industries like fashion and retail.
Yeah.
Consumers are demanding greater transparency and accountability
Yeah.
from the brands they support.
Right. People are becoming more conscious of the environmental and social impact of their purchases, and they're looking for companies that align with their values.
Exactly.
So what concrete steps is PDS Ltd taken to integrate sustainability into their operations?
Well, one example is their partnership with HSBC and Emirates Bank Dubai
Right.
for a sustainability-linked trade finance initiative.
Okay, remind me what that means exactly. How does that work in practice?
Essentially, they've agreed to specific targets related to things like reducing their greenhouse gas emissions, minimizing water consumption in their manufacturing processes, and ensuring they source materials ethically.
Yep.
If they meet those targets,
Yeah.
they get rewarded with lower financing costs.
It's a win-win situation, isn't it?
It is.
They get financial benefits for being sustainable, and it incentivizes them to continuously improve their environmental and social performance.
Exactly. It aligns their financial goals with their sustainability goals,
Right.
which is a smart move.
Yeah.
It also sends a clear signal to their stakeholders that they're serious about sustainability.
So it's not just a PR exercise. They're putting their money where their mouth is.
Exactly.
What other initiatives are they pursuing on the sustainability front?
They've been actively participating in industry events like Farad Tech's 2024,
Okay.
which is a great platform to showcase their sustainability initiatives and engage with other players in the textile and apparel industry.
So they're not just doing things in isolation. They're actively engaging with the wider industry to promote sustainable practices.
Right. They recognize that sustainability is a collective effort, and they're trying to play a leadership role in driving positive change within the industry.
They've also launched some interesting products that incorporate sustainable materials and innovative designs.
Yes.
Like the Design Arc Bedding Collection.
Yes.
It's a great way to showcase their commitment to sustainability while appealing to consumers who are looking for eco-friendly options.
Absolutely. They're demonstrating that sustainability doesn't have to come at the expense of style or quality.
Right.
They're finding ways to integrate sustainable practices into their product development process without compromising on the things that consumers care about.
So they're ticking a lot of boxes when it comes to sustainability. They're partnering with financial institutions to incentivize responsible practices. They're engaging with the industry to promote change. And they're developing products that appeal to environmentally conscious consumers.
Yes.
It seems like they're taking a holistic approach.
I agree. It's not just about one-off initiatives. They're weaving sustainability into the fabric of their business.
Okay, so we've explored their sustainability efforts in detail. Let's turn our attention back to their financial performance for a moment.
Sure.
You gave us a quick overview earlier, but I'd like to dig a little deeper into some of the key metrics.
Sure. What specifically would you like to focus on?
Well, let's talk about their profitability.
Okay.
They're clearly a high-growth company.
Yes.
But are they also generating healthy profits?
Yes, they are. Their profitability metrics are looking really strong.
Okay.
For example, their EBITDA margin which essentially measures their operating profitability,
Right.
was quite impressive in the first half of the fiscal year.
Can you give us the exact figures? I'm curious to see how they compare to other players in the industry.
Sure. Their EBITDA margin for the first half of fiscal year 2025 was 3.8%.
Okay.
This is a healthy margin, especially considering they're investing heavily in growth initiatives.
Right. They're not just sitting on their profits, they're reinvesting a significant portion of their earnings back into the business
Exactly.
to fuel future growth.
And that's a sign of a company that's confident in its long-term prospects.
Right.
They're not just focused on short-term gains. They're building a sustainable business for the future.
That's a good point.
Yeah.
They're playing the long game, and they're willing to make investments today to ensure continued success in the years to come.
Precisely. And that approach seems to be paying off.
Yeah.
Their profit after tax,
Yeah.
PAT, has also been on an upward trajectory.
Yes, we mentioned earlier that their PT tripled compared to the first quarter of this fiscal year.
Yeah,
That's a pretty remarkable achievement.
it is.
What are the key factors contributing to this profitability growth?
Well, several things are working in their favor.
Okay.
Firstly, their core sourcing business is performing exceptionally well.
Oh.
They have a strong track record in this area, and they've been able to leverage their expertise and relationships to drive growth and profitability.
So that solid foundation in sourcing is providing them with a stable base to build upon.
And they're not just relying on their core business to drive profits.
Yeah.
They're also seeing positive contributions from their manufacturing segment,
Right.
which is growing rapidly.
Right. We talked about how they're strategically expanding their manufacturing capabilities, particularly in regions closer to their major markets.
Exactly. That focus on near sourcing is helping them reduce costs, improve efficiency, and respond more quickly to change in demand.
And their foray into new business models like fast fashion and SaaS is also starting to generate returns.
Yes, those new ventures are still in the early stages, but they're showing promising signs of growth and profitability.
Okay.
It's a testament to their ability to identify and capitalize on emergent opportunities.
So overall, they're firing on all cylinders when it comes to profitability.
Yes.
They have a strong core business, they're expanding into new areas,
Yes.
and they're managing their costs effectively.
Mm-hmm.
It's a recipe for success.
I agree. They seem to be hitting all the right notes, and their financial performance reflects that.
Now, let's talk about their dividend policy.
Right.
They recently announced a generous interim dividend, which is great news for their shareholders.
It is.
What's their philosophy on dividends, and how does this latest dividend fit into that philosophy?
PDS Ltd has a history of rewarding its shareholders through consistent dividends.
Okay.
They believe in sharing their success with the people who have invested in their growth.
Mm-hmm.
This latest interim dividend is a continuation of that philosophy.
They've proposed a dividend of 1.65 rupees per share,
Yes.
which represents a payout ratio of 83%.
Yes.
That's a pretty significant portion of their profits being returned to shareholders.
It is. It shows they're confident in their financial position and their ability to generate sustained profits.
Right.
They're not hoarding their earnings. They're distributing a significant portion back to their investors.
That's definitely a positive sign for investors looking for a company that prioritizes shareholder returns. Mm-hmm.
But they also recently raised a significant amount of capital
Yes.
through a qualified institutional placement, or QIP.
Right.
How does that factor into their dividend decision?
That's a great question.
Yeah.
The QIP brought in a substantial influx of cash,
Okay.
which strengthens their financial position
Right.
and gives them more flexibility in terms of capital allocation. It's likely that the proceeds from the QIP played a role in their ability to offer such a generous dividend.
So the QIPs indirectly benefiting shareholders in the form of a higher dividend payout.
Yes,
That's an interesting connection.
it is. It shows how they're strategically using different financial instruments to optimize their capital structure and reward their investors.
Okay, we've talked a lot about their income statement and their dividend policy.
Yes.
Let's shift our focus now to their balance sheet.
Okay.
What can we learn from their balance sheet about their financial health and stability?
Their balance sheet provides valuable insights into their financial strength.
And their ability to withstand economic headwinds.
Okay.
One key area to focus on is their leverage ratios.
Okay.
These ratios measure the extent to which they're using debt to finance their operations.
Right. Debt can be a useful tool for growth, but too much debt can be risky.
Yes.
Especially in a volatile economic environment.
Exactly.
So what do their leverage ratios tell us about their financial prudence?
Well, their net debt-to-equity ratio is incredibly low at just 0.07x.
Okay.
This means they're using very little debt to finance their assets.
Okay.
They're relying primarily on equity, which
Yes.
is a sign of financial strength and stability.
That's reassuring. It suggests they're not overly reliant on borrowed money,
Yes.
which gives them more flexibility and resilience in the face of economic challenges.
Exactly. They're not putting themselves in a precarious position
Right.
where a sudden increase in interest rates or decline in revenues could cripple their operations.
What about their net debt to EBITDA ratio? That's another important metric for assessing their ability to service their debt.
Their net debt to EBITDA ratio is also very healthy at 0.27x.
Okay.
This indicates they have ample cash flow to cover their debt obligations.
Right.
They're generating enough operating income to comfortably manage their debt burden.
So both of those leverage ratios paint a very positive picture of their financial discipline.
They do.
They're not overextended, and they're not putting their long-term sustainability at risk by taking on excessive debt.
Precisely. They seem to be taking a very prudent approach to managing their debt, which is a positive sign for investors looking for a company with a solid financial foundation.
Okay, so their leverage ratios are looking good.
Yes.
What about their working capital management? How efficiently are they managing their short-term assets and liabilities to ensure smooth operations?
Well, their working capital metrics provide some interesting insights.
Okay.
For example, their inventory days, which measure how quickly they're turning over their inventory, have actually improved slightly
Okay.
compared to the previous year.
So they're getting better at managing their inventory,
Yeah.
which is a good sign for efficiency.
It suggests they're getting better at forecasting demand and optimizing their stock levels
Okay.
to minimize waste and storage costs.
But their debtor days have increased slightly,
Yes,
which means it's taken them a bit longer to collect payments from their customers.
that's true, and it's something they'll need to keep an eye on.
Yeah.
Could be a sign that they're extending credit terms to win business,
Okay.
or it could indicate some inefficiencies in their collection processes. It's something we need to analyze further to understand the underlying reasons.
It's a balancing act, right?
Yes,
Extending credit can help boost sales, but it also increases the risk of late payments
exactly.
or bad debts.
It's a delicate balance, and they need to find the sweet spot that optimizes their sales growth while also managing their credit risk effectively.
What about their payable days, which measure how long it takes them to pay their suppliers?
Their payable days have remained relatively stable compared to the previous year. This suggests they're maintaining a consistent approach to managing their supplier relationships and payment terms.
Okay, so overall, it seems like they're managing their working capital reasonably well.
Yes.
But there are always areas for improvement.
Yes.
It's a constant process of optimization and refinement.
I agree. Working capital management is a dynamic process.
Right.
And they need to constantly adapt their strategies based on changing market conditions and internal operational factors.
Now I'd like to delve into their cash flow statement.
Okay.
This statement provides a really clear picture of how they're generating and using cash,
Yes.
which is essential for understanding their short-term liquidity and their ability to fund future growth.
Absolutely. Cash flow is often referred to as the lifeblood of a business.
Right.
And analyzing their cash flow statement can tell us a lot about their financial health and their ability to execute their growth plans.
So what are some of the key takeaways from their cash flow statement for the first half of fiscal year 2025?
One interesting observation is that they generated negative operating cash flow during this period.
Okay.
This means they used more cash in their day-to-day operations than they generated.
Negative operating cash flow can be a red flag for some investors.
Yeah.
What's driving this negative cash flow? And is it a cause for concern?
It's not necessarily a cause for alarm in this case.
Okay.
The negative operating cash flow is primarily due to their investments in working capital,
Okay.
particularly increased inventory and receivables to support their growing sales.
So it's essentially a consequence of their rapid growth.
Yes.
They're investing heavily in inventory and extending credit to customers to fuel their sales expansion.
Exactly. It's a classic case of spending money to make money.
Right.
They're strategically deploying cash to drive top-line growth,
Okay.
and they expect those investments to pay off in the long run.
That makes sense. What about their investing cash flow? Are they making significant investments in property, plant, and equipment PP&E
Hmm.
or other capital assets?
Yes, they are.
Okay.
Their investing cash flow was also negative, reflecting their continued investments in growth and expansion.
Okay.
They're investing in new facilities, equipment, and technologies
Mm-hmm.
to support their increase in production capacity and their expansion into new markets and business models.
So they're not just sitting on their cash, they're actively deploying it to create future value.
Right. They're using their cash strategically to position themselves for long-term success.
Okay.
And they're not just relying on internal sources of funding to fuel those investments.
You're referring to their financing activities, right?
Yes.
They recently raised a significant amount of capital through that QIP we discussed earlier.
Exactly. Their financing cash flow was strongly positive,
Okay.
reflecting the influx of cash from the QIP and other borrowings. This gives them a solid war chest to fund their growth ambitions and pursue strategic acquisitions.
So even though their operating cash flow was negative,
Yes.
their strong financing activities have resulted in a net increase in their cash and cash equivalents.
Yes. Their cash and cash equivalents have actually increased significantly, which is a positive sign.
Okay.
It means they have a healthy cash buffer
Mm-hmm.
to navigate any short-term challenges and continue investing in their growth.
Okay, so they're generating negative operating cash flow due to their growth investments, but they're offsetting that with strong financing activities,
Right.
resulting in a net increase in their cash position.
Yes.
It's a bit of a balancing act, but it seems like they're managing it well.
I agree. They're walking a tightrope,
Yeah.
but they seem to be doing it with confidence and a clear understanding of the risks and rewards involved.
Now let's zoom out a bit and talk about their overall growth strategy.
Okay.
It's clear they're ambitious and are pursuing multiple avenues for expansion.
Their growth strategy is like a three-pronged approach. They're focused on organic growth within their core business, strategic acquisitions to expand their brand portfolio, and investments in new business models
Okay.
to diversify their revenue streams and tap into emerging trends.
Let's break down each of those elements, starting with organic growth.
Sure.
How are they planning to grow their core sourcing and manufacturing businesses?
Well, they're focused on several key areas.
Okay.
Firstly, they're expanding their customer base by forging new relationships with retailers and brands around the world.
So they're not just content with their existing customer base, they're actively seeking out new partnerships to widen their reach.
Exactly. They're leveraging their reputation and track record
Mm-hmm.
to attract new clients and grow their market share. They're also penetrating new markets
Okay.
by expanding their operations into new geographies.
So they're not limiting themselves to their existing markets. They're venturing into new territories to capitalize on untapped opportunities.
Right. And they're not just expanding geographically.
Right.
They're also expanding their product portfolio
Oh, okay.
by introducing new categories of goods to meet evolving consumer demands.
So they're not just a one-trick pony, they're constantly innovating
Exactly.
and expanding their offerings to stay ahead of the curve.
They're adapting to changing consumer preferences and market trends
Right.
to ensure they remain relevant and competitive.
Okay, so they have a solid plan for organic growth.
Yes.
What about strategic acquisitions?
Mm-hmm.
How are they using acquisitions to accelerate their growth and expand their market presence?
Their acquisition strategy is focused on identifying brands that complement their existing offerings
Okay.
and provide them with access to new markets,
Mhm.
new customer segments,
Okay.
or new capabilities.
So they're not just acquiring any brand that comes along. They're
Yes.
being very selective
Yes.
and strategic in their choices.
Precisely. They're looking for brands that fit into their overall vision and can enhance their competitive advantage.
Right.
They're also being mindful of the integration process,
Mhm.
recognizing that successful acquisitions require careful planning and execution
Right.
to realize the expected synergies and benefit.
Right. Integrating acquired companies can be challenging.
And it's not always a smooth process.
It sounds like they're aware of those challenges and are taking steps to mitigate the risks.
They are. They're approaching acquisitions with a cautious optimism,
Okay.
balancing their desire for growth with a realistic understanding of the complexities involved.
Okay, so we've covered organic growth and strategic acquisitions.
Yes.
What about their investments in new business models? They're venturing into areas like fast fashion, online channels, and SaaS. How do those initiatives fit into their overall growth strategy?
Those investments are all about diversification
Okay.
and future-proofing their business.
Okay.
They recognize that the retail landscape is evolving rapidly, and they're taking proactive steps to adapt to those changes.
It's like they're not just riding the wave, they're trying to anticipate the next wave and position themselves to ride that one too.
Exactly. They're constantly scanning the horizon for emerging trends and exploring new ways to create value and generate growth.
Right.
Their foray into fast fashion, for example, is a recognition of the growing demand for trendy and affordable clothing, especially among younger consumers.
Right. And their investments in online channels are a response to the undeniable shift towards e-commerce.
Absolutely.
Consumers are increasingly comfortable shopping online, and PDS Ltd needs to have a strong online presence to remain competitive.
Absolutely. And their expansion into SaaS is a strategic move to leverage technology to create new revenue streams
Right.
and enhance their value proposition to retailers.
Mm-hmm.
They're providing retailers with the tools they need to optimize their operations
Right.
and thrive in a digital world.
So they're essentially building an ecosystem of services that caters to the evolving needs of the retail industry.
Precisely. They're creating a comprehensive suite of offerings
Hmm.
that can help retailers of all sizes navigate the complexities of the modern retail landscape.
Okay, we've painted a pretty rosy picture so far.
Yes.
But every company faces challenges,
Right.
and PDS Ltd is no exception. What are some of the key risks and challenges that could potentially hinder their progress?
Well, one obvious risk is the global economic outlook.
Okay.
We're living in uncertain times,
Right.
and a prolonged economic slowdown or recession could definitely impact consumer spending,
Right.
which would have a ripple effect on their business.
Right. The fashion and retail industry is particularly sensitive to economic fluctuations.
Yeah.
Consumers tend to cut back on discretionary spending during tough times, and clothing and home goods are often the first to go.
Exactly. So they need to be prepared to weather any economic storms that comes their way.
Right.
They also face intense competition,
Okay.
both from established players and new entrants,
Mm-hmm.
especially in the online and fast fashion segments.
The competition in the fashion industry is fierce, and it's only getting more intense as more players enter the market. And the lines between online and offline retail continue to blur.
They're also exposed to supply chain disruptions,
Right.
which have become a major concern in recent years.
Yeah.
Geopolitical tensions, natural disasters, and labor shortages can all disrupt the flow of goods and materials,
Mm-hmm.
which can lead to delays, cost increases, and lost sales.
They're operating in a globalized world where their supply chain spans multiple continents.
Yes.
So they need to be very adept at managing those risks
Yeah.
and mitigating potential disruptions.
Absolutely. And let's not forget about inflationary pressures.
Right.
Rising inflation is pushing up the cost of everything from raw materials to transportation,
Mm-hmm.
which can squeeze their margins if they're unable to pass those costs on to consumers.
They're walking a tightrope, trying to maintain competitive pricing while also managing their own costs in an inflationary environment.
It's a delicate balancing act.
Yeah.
And they need to find creative solutions to navigate those challenges without compromising on quality or profitability.
Right.
They also face the challenge of integrating their acquisitions effectively.
Right. We talked about the challenges they've faced with Ted Baker.
Yeah.
And those challenges are not unique to that acquisition.
Right.
Integrating any company into a larger organization is complex.
It is.
And it takes time and effort to align cultures, systems, and processes.
They need to ensure that the brands they acquire are a good cultural fit
Right.
and that they can effectively integrate those brands into their existing operations without disrupting their core business.
So it's not just about buying up brands.
No.
It's about making sure those brands thrive within the PDS Ltd ecosystem.
Exactly. They need to find ways to leverage the strengths of the acquired brands while also providing them with the support and resources they need to succeed.
Okay, so we've identified some of the key risks and challenges they face. Given all that, what's your overall assessment of their prospects? Are you optimistic about their future?
Overall, I'm cautiously optimistic. They have a lot of things going for them. A strong core business, a clear growth strategy, a commitment to sustainability, and a solid financial foundation.
Mm-hmm.
They're also led by an experienced management team that has a proven track record of success.
That's reassuring. It sounds like they have the right ingredients in place to navigate the challenges and
Yeah.
capitalize on the opportunities that lie ahead.
They do. However, they need to be mindful of the risks and challenges we discussed earlier.
Right.
They need to stay agile and adaptable, and they need to execute their strategy flawlessly
Right.
to achieve their ambitious goals.
It's a competitive landscape,
It is.
and they can't afford to rest on their laurels.
Right.
They need to keep innovating, keep expanding, and keep pushing the boundaries to stay ahead of the curve.
Absolutely. The retail industry is constantly evolving,
Right.
and only the companies that can adapt and evolve with it will survive and thrive in the long run.
Now, before we wrap up, I want to ask you and our listener this. What are some of the key questions that come to mind as we reflect on this deep dive into PDS Limited? What are some of the things you'll be watching closely as they continue their journey?
One question that I keep coming back to is how they'll navigate the fast fashion landscape while staying true to their sustainability commitments.
Yeah, it's a tough challenge, and I'll be watching closely to see how they approach it.
Yes, that's a big one.
Yeah.
I'm also curious to see how they'll integrate their acquired brands, particularly Ted Baker, and whether they can replicate the success they've had in their core sourcing business in these new ventures.
I'll also be keeping an eye on their SaaS business.
Right.
They've shown a lot of promise in that area, but they've also hit some roadblocks. It'll be interesting to see if they can overcome those challenges and establish themselves as a leader in the retail technology space.
So many things to watch.
Yes.
So much potential for growth and disruption. It's clear that PDS Limited is a company on the move.
And it'll be fascinating to see where their journey takes them in the years to come.
I agree. They're a dynamic company with ambitious goals, and I'm excited to see how their story unfolds.
Well, this has been an incredibly insightful deep dive into PDS Limited's business, their strategy, and the challenges and opportunities they face in the ever-evolving fashion industry.
It has.
To our listener, we hope this deep dive has provided you with a deeper understanding of PDS Limited and the forces shaping the fashion industry. Remember, knowledge is power.
Yes.
And by staying informed, you can make more informed decisions, whether you're an investor, a business leader, or simply a curious consumer.
And as PDS Limited's story continues to unfold, we encourage you to stay curious.
Yeah.
Keep asking questions.
Absolutely.
And never stops learning.
Thank you for joining us on this deep dive. Until next time.
Goodbye.